My name is David Siddons, and this is the Better Decisions podcast, a podcast that discusses everything to do with South Florida real estate and much more, ultimately everything to do with making a better decision. Now, this podcast is all about a big subject which you need to tune in on. If you live down here in South Florida, you need to watch this and pay attention. It may be one of the most important podcasts I'm going to do this year. Here I have with me in the studio, I have Hugo Garcia, who is an expert when it comes to the insurance situation in South Florida. You are an attorney. This is our second podcast.
Correct.
You're going to introduce yourself once more again for the audience, and then we're going to maybe recap a little bit on what we discussed last time, and then we're going to get into the current state of the insurance market. Like I said, if you are a homeowner, a condo owner, and you live anywhere in South Florida, or if you are looking to buy down here in South Florida, you need to watch this podcast. If you don't, do so at your own risk. That's all I'll say. Hugo, thank you for doing this. Please introduce yourself for the audience out there.
Well, thank you, David, for having me again. It's always great being here in front of you and talking about the subject that's pretty much always up in the air and always in kind of chaos and in flux here in South Florida, which is insurance.
And what you actually do, to be clear, you're not an insurance broker. You're not selling insurance.
No, we sue insurance companies. Yeah.
Which makes this far more interesting, to be quite honest with you. So you do not insure, you sue the insurance companies.
Correct.
For what? Simply not paying out?
I sue them because they do not want to pay out when there is a claim that's produced or the outcome or the result of a hurricane, a windstorm, or any kind of catastrophic event that causes damage to a homeowner's property.
Okay, so with that in mind, circling through that, 2 years ago, it was about 2 years ago, we shot a podcast. It just came off the back of a hurricane. I think it was Hurricane Ian.
Hurricane Ian.
Yeah, Hurricane Ian hit the West Coast. It was like literally, I don't know, maybe a week or 2 weeks after that happened. And we saw the aftermath of that. It was pretty horrific. We feel like we dodged a bullet. But you said at the time, the insurance premiums are going to go up by as much as 200 or 300%. They're going to go up a lot. So if you don't like your premium costs right now, get ready because it's going to get more difficult and you need to really be careful. And then, well, what happened?
What happened was that what we anticipated actually occurred. And we're actually back to square one in the sense that, what we spoke about during that time period transpired. And there's been no change. There's no help, no positivity in the community regarding insurance or premiums coming down for whatever reason.
What were you hoping for? I mean, getting into the insurance situation, the conversation now, when you said no help was given, what were you hoping we might see?
So as a result of the hurricane that passed during that time period, there was a bunch of properties that were devastated. Even a bridge had collapsed here over there in...
was it Naples?
By the Naples area, somewhere in the West Coast. We were hoping that the carriers were going to come and pretty much rescue those homeowners and provide assistance and process their claims. But what we saw was to the contrary, in which the insurance carriers are actually shortchanging the homeowners, some of which had never even put a claim on their properties. Have been having owned homes in the late 1980s, even in the early 90s, never having put a claim on their property. And now they put this claim because this storm pretty much just swiped them right through the middle of their house, and just didn't want to follow through and provide what we call their side of the bargain. Because remember, the insurance policy is a contract where you pay them a premium. So when you need them to come and back you up for a loss, they're going to provide that coverage. And what we saw was that there were a lot of what we call lowball offers being made. Mm-hmm. Some of these homeowners.
When you say lowball, you mean what they were going to pay out these homeowners for the damage that was done to the house?
Correct. So, and some were just getting denied, saying there was wear and tear to their property and they were not going to cover it.
You called it a one-sided deal.
Yeah.
You said that the insurance game is a one-sided deal where one side benefits and the other side simply doesn't.
Correct.
You gave me a story where you said that people would, like 2 months before the storm hit, people were getting their contracts renewed. They were going in, they were calling the insurance companies and saying, okay, so I need to renew for next year. They were paying their premium with, you know, the best will in mind, with intent, paid them the amount, the full year. And then when the storm hit, the insurance company said, your roof wasn't up to code, wasn't up to the level that it should be. It was, too old and it should have been replaced. So as a result, we're not going to pay you. And the conversation went something along the lines of, well, as an owner, why didn't you as an insurance company tell me that my roof was too old? You were happy to take my premium payment, but at that point, why didn't you say, hey, you've got to get your roof replaced?
Correct.
They didn't do any of that.
No. And we're still having the same problem today as we speak. It's the same problems, just going over and over again in the same circle. There's no repercussions for these big insurance companies, and to the contrary, we're seeing there's a lot of support from Tallahassee to the insurance companies. Where they've actually made it more difficult for the homeowners to be able to sue insurance companies by removing the one-sided attorney's fees, in which previously, prior to the current change in the law, where the insurance companies had to pay the homeowners attorney's fees. Now that's no longer the case. Now the homeowners have to pretty much pay their own attorney's fees. So what's occurring now is that for new claims now being processed, attorneys are taking most of these cases on a contingency. But at the end of the day, when they passed that new law, try to make it more difficult for the lawsuits, what happened was that Tallahassee pissed off a bunch of attorneys, including myself, and now we're taking on these lawsuits on contingency, even on the smaller scale of some of these claims, just to help out the homeowners.
So looking at claims, and again, let's make it into the real world application. $100,000 attorney's fees added to the let's call it the deductibles that you're dealing with on these kind of, and again, you've got to look at your contracts. You've got to study and understand what your deductibles are. The deductibles on these can be really significant. And if you look at what a typical claim is, I think one of the typical claims was like $250,000 in Florida. That was like an averaged out claim. It's almost not worth doing in the end. You might as well just, I won't say self-insure, but what you can end up getting out of the insurance company might just about match what you would end up paying on your deductibles and your attorney's fees.
So your typical homeowner finances their purchase.
Yes.
Typically, most of them do. So the insurance companies know that. So they know that when you have a mortgage, you need insurance. Yeah. Right. So what I see that's more like a monopoly or a scheme where the insurance company is gonna raise the premiums because they know that you're gonna have to pay it through the mortgage company,
you're forced. There's no option
through an escrow, whatever it is. They know that you need insurance. So what happens is that you have all these insurance companies who are all buddy with each other, and they know pretty much what the other insurance carrier premiums are. So they try to be at the same playing field. Some bit less significant, but at the end of the day, they're all pretty much at the same level, depending on the property.
Wow. So you mentioned the word monopoly. And I want to get into the conversation of the monopoly in the South Florida market. Yep. Before I do, I'm going to take a 2-second break just to actually mention our sponsor on this, which is Smush Coffee. It's a new brand of coffee, which is a combination between organic coffee and lion's mane mushroom, which gives you the alertness. I actually like it. I enjoyed it. We had one of these before we started rolling.
Yeah, it was pretty good.
Tastes exactly it's like normal coffee, but it doesn't have that kind of like mushroomy dirt taste that I didn't like. So if you want to try something different to coffee, give this a go. Let's get back to the conversation. The monopoly situation, and I'm going to mention the big group in the room, Citizen, the main, as people say, it is the under government-backed insurance group. What does that mean? Explain to those people who don't know out there, what is Citizen's role in the South Florida market, and how has it changed over the last couple of years?
So Citizens, historically speaking, was the insurance of last resort, sort of say. But more recently, it's become the insurance. Is the most
Why the insurance of last resort? Why was it called that?
Because in the private market, if your property was not able to get insured, or the premiums were through the roof, or there were, somewhat the more
difficult cases.
Yeah, the more of, I don't want to use the word affordable, but the more, the one that would kind of take you on if everybody else rejected you, or you couldn't, go through with the other insurance carriers. But now, speaking today, they're actually the insurance company of choice. And even though they've gone through what's called I believe it's called a depopulation program, where they've kind of kicked out a bunch of homeowners from their group of policies, we are still seeing Citizens being the insurance.
I know the answer to this, but I think it's important that the audience understands this. Why have they become the monopolizing insurance carrier in South Florida today? They were the insurance of last resort, but they're now almost having a monopoly of the market. Why is that?
Well, what's going on now is that most insurance companies, or the ones that we've had here in Florida, have actually left Florida, right? So now the market has become more
one-sided.
It's always one-sided, but it's been because more tougher or less easier for somebody to get insurance when they're purchasing a property that the roof age is 20 years, 22 years, 15 years. Most of the time, the insurance premium is through the roof. So what Citizens does is kind of acquires that book of business. The book of business being these properties that are having these old roofs on their
kind of like I also call it subprime, but less than ideal pieces of real estate.
Correct.
Which obviously, look, older houses and older condos. One of the conversations that we want to have that needs to be addressed is the economic impact of older homes and older condos on the market. It's not just single-family homes. I mean, of course, we're thinking about that. I just got back this morning. I was listening and hearing Craig Studnicki, head of ISG Related, who we've had on the show twice, and we'll have again, as we were talking about the Q1 report for 2024. And we discussed and looked at how there is a ballooning number of aging condos and aging product in the South Florida market. And if you look at inventory, a lot of that's taking up most of the weight. In fact, 80% of it is product that in the condo market is 80 years or 30 years or older. So I think there's something like 18,000 units on the market right now across 3 counties, Miami-Dade, Broward, and Palm Beach. Out of that, 15,700 of those, or around that, is product that's 30 years or older. 2,000 of that is stuff that's 10 to 30 years old, and only 812 units are actually from buildings 10 years and younger. So there's a lot of old product. That's becoming a big issue because the HOA fees have gone up. They've gone up a lot. I mean, in Coconut Grove, we're literally down the street from Coconut Grove, which is the closest waterfront condo market that we have before you get into Brickell. And in Coconut Grove, the HOA fees for even the newer buildings has gone up significantly and across South Florida. Where is the justification of why those fees have gone up so much, why the insurance premiums have gone up so much in the last couple of years?
Well, I mean, the majority of it, I would say, is the insurance. The premiums, the insurance premiums of those condos being so close, to the coastal waterways or the coastal waters. But another one being is the recent changes in the law where now they're requiring HOAs to have bigger budgets to do more of the what's called the 40-year or 50-year recertification, but now they're making them less. I think it's 20 years. 25
years. So if you are 3 miles from the coast, which is basically everywhere in Miami, to be honest with you, anywhere that's that is what we call a high-end market. Our entire luxury market is all along the coastline. If it's 25 years from the time of CO, certificate of occupancy, you have an assessment. You have a major assessment or a major recertification of the building at that moment, and there's a lot of money that has to be spent to make sure that the building is up to code. The question is, we haven't had any big storms in the last couple of years, so the insurance premiums have gone up so much. What is their justification? What's their argument? Not yours, but what are they saying? This is why we've had to increase the premiums so much.
Well, they always they always blame the attorneys. Tell you that. And when it comes to the insurance market, I can tell you that they're always focusing on the litigation aspect of it, of the insurance claims, but the majority of it being where we are situated on the map, as it pertains to the U.S., where we're more prone to hurricanes, tropical storms, things of that nature. And also, if you're on the water, the ocean, all that, when there's wind, all that goes into the building, and obviously with time, the environment is more, it's harsher on the structures versus in other parts of the country.
Is the East Coast, the study on the East Coast? I mean, I saw, there was, I think it was Maria when stuff came up through New York and New Jersey.
Yep.
So the entire Eastern Seaboard is arguably equally affected. And in many cases, the buildings down in South Florida are actually better built to withstand a storm and a hurricane than other parts of the country. That's because correct. We are really down here. So, it's certainly not an isolated incident for just South Florida. It runs up the entire Eastern Seaboard. Yet, and again, I know our premiums have systematically increased across the country. New York, Miami, the West Coast, the fires, the fires that I had in California, yep. They saw a pretty big hike in their premiums. And I know that a lot of buyers, a lot of people who will watch this, and as California is right now, I think the number 2 state for loss of population. Wow. This year, Miami and South Florida is the number 1 or 2 state for increase in population. And a lot of that is actually the movement from Californians to Miami. Since we shot our last podcast, I have a much higher ratio of Californians talking to me about insurance. They're a lot more aware of it than I think maybe other states are, because of their wildfires, because of their insurance premiums and their carriers, and they know what Citizen do. They're not unfamiliar with the insurance game. But as they come over here right now, the premiums and the HOA fees are exponentially higher. I mean, I've seen newer buildings, double their HOA fees in the last couple of years.
I've seen it too.
The question that I have for you is not where it is right now, but do you think that their justification for increasing is warranted? And can we do anything about it? Is there anything that anyone can do anything about this?
All right. So remember that insurance is a business. And from what I remember, from what I recall, there was one insurance carrier that I believe they doubled or tripled their net profits for last year.
Wouldn't surprise me if it was Citizen.
Yeah. So, and some of these numbers are public record, but when you see that they're crying wolf, right? But then they're tripling their profits, right? And then kind of sorting out these conspiracy theories about global warming or about how attorneys, are filing a bunch of lawsuits for the insurance claims or whatnot, and they're still tripling their profits. It's kind of tough to say exactly, okay, what is causing the increase in the insurance?
Yeah, if you've got an insurance carrier,
and I think also, and I don't mean to interrupt you, I mean also there's a political aspect of it.
Yeah, go into that, because I think that's pretty key. I think that we need to discuss that.
Yeah, I mean, not to get into politics, but some of these politicians get so much money in their campaigns that causes these changes in the law. For example, like the one-sided attorney's fees not being one-sided anymore. So I think that's a huge component of it, is the politicians in Florida not doing something about it, right? When they're seeing the statistics and not putting heavier regulations on them.
I've heard that before. People saying, I've sat in rooms with a lot of real estate professionals and saying the biggest issue is, and until they put some handcuffs on these insurance companies, when they've got a monopoly, you're letting them do whatever they like, whatever they want to do. And if you're letting them use we need more insurance because we're in a higher risk environment now, yet they are tripling their returns, doesn't that run contradictory to the whole argument? Like, if you're making 3 times the amount of money to insure people, to cover them from a catastrophe, and a storm hits. I mean, when Irma hit, you're talking about, you just said, companies making 2 or 3 times what they made the previous year, even in a year when there's a major storm. How does that happen unless you're not paying people out or you're falsifying the risk that you're telling people that they're taking, and therefore and increasing their premiums to an unjustified level?
So my understanding is that the majority of these, the private sector for insurance companies, they're all pretty much shell companies. So that's why, I mean, it's a great business where you just collect money. And then at the end of the day, it's a game. And I say it's a game because you could have a legitimate insurance claim, right? And the insurance company is not gonna look at it from that aspect. They're gonna look at, okay, if I get this claim and I deny it, okay, how long can I forego this claim before I have to pay it, right? By the time I have to pay it, right, I have to hire an attorney. I have to hire what's called an insurance defense firm. How much am I going to have to come out of pocket, okay, to pay these defense attorneys to delay the process and then offer this mom and pop $5-10 for their roof?
Yeah.
Right. So it's a game. They do the entire analysis of their coffers. They have, special individuals in their teams where they just look at numbers, and they have this market down to the T. So it's not about, you could do everything correct pursuant to your, post-loss conditions, what they call it, on your insurance policy. You could hire your public adjuster, process everything timely. At the end of the day, it comes down to numbers. It's a business. So they know the tactics. They know the delays. In fact, the delays, what I want to emphasize here, the delays that our court systems have in these cases being tried, being resolved. So they know all this stuff. So they use it to their advantage.
How many? I don't know if you have the numbers, but I'd be curious to know how many claims are made every year.
I mean, they're in the hundreds of thousands of claims.
And because there's so many of them, you're saying that the courts don't have the ability to handle them in a timely manner.
They don't.
And it becomes a war of attrition.
Yep.
Whoever has the deepest pockets wins, and guess who has the deepest pockets?
Correct. Yep.
So if this situation is occurring, back into the real world application, because again, look, we can look at the realities. One of the conversations that we have that is put out there, and I'd love to understand from how you discuss this in court.
Yep.
The conversation about climate change, and I'm not a environmentalist. I'm not a meteorologist, but I mean, I just think like 10 days ago there was the flooding in Dubai, and I'm playing devil's advocate to kind of see where this conversation how it's handled in court. But 10 days ago there was flooding in Dubai that I've never seen before, and every year there's news that comes out of major storms and major issues that happen around the world, and the climate is definitely changing and things are happening. How is it addressed in court? How is it viewed in court? And how does the conversation generally play out?
That's an interesting point you touched on there, because we rarely touch that topic in court.
Really?
Yeah. The whole thing about climate change, I've never seen anybody bring up that argument, not even on the defense side. But what I say is this: if you're going to do business and you're going to insure a property and you know the market that you're in, you assume the risk of insuring that property. If you don't want to do business here and provide, insurance premiums that are going to be affordable and they're actually going to cover somebody, then don't come into our state. And I think it's going back to the whole politics side of it. There should be tougher regulations on them, on the insurance carriers, to try to prevent this from these premiums going 300 times what we spoke about the last podcast. Yeah.
So what you're saying is the establishment of an agreement between two parties has to be the focus of conversation when you're in court. Disputing whether there's a climate change or not is not really part of the conversation. It's not relevant. What's really relevant is party A agreed to pay party B if there is damages, and now party A doesn't want to pay party B. Correct. Or they want to find reasons not to.
Correct.
As we move forward, and I think this is when it gets into the real world application, and people will be watching this and saying, so how does this relate to me? If I'm thinking about selling, let's talk about sellers and then we go into buyers. So let's say you own right now in South Florida, and you're owning, and again, I'll talk about Coconut Grove and Coral Gables, right? We are sitting right here in South Miami area. High Pines is just behind us. Ponce Davis is just off to our east, and then beyond that it's Coral Gables and it's Coco Plum, and then you've got the waterfront houses. The zoning if you want to understand, I guess, the zoning risk for insurance, there's different tools out there to have a look. Storm surge simulators and other things. Look at your property and see what zone it sits in. But in terms of the insurance required for you to feel comfortable, what do you say to those people who sit right now on the flood in the flood zone? They don't have to be looking at waves, but what do you say to people in the flood zone area right now? And who are the people that are most at risk right now?
Well, I mean, generally speaking, I think everybody is at risk. Because, even if you're not in a flood zone, your property is going to have some kind of, your insurance premium is going to have some kind of effect as a result of those properties that are in a flood zone. There's always going to be that ripple effect that's going to affect everybody indirectly or directly. But if you're in a flood zone, for example, I mean, your insurance premium is going to keep going up. Unless there's some kind of regulation or some kind of preemptive mechanism on behalf of the legislator or something that could stop the insurance companies from increasing their insurance premiums.
And they've increased 200 or 300% in the last few years.
And it's going to keep going up.
If there was a storm this year, what would be the probability of the premiums going up?
Oh, so 1,000%. 1,000%.
So, which is, I mean, that's not surprising. But what, in your opinion, I mean, they increased it 200 to 300% in the last couple of years. What could it go to?
So, if you were to get your everyday homeowner, right, single family home anywhere in Miami, and you ask him, hey, has your insurance gone up, your homeowner's insurance, after the Hurricane Ian storming of the West Coast, even though they didn't touch your property? And they're going to tell you, yes, it's gone up. So it's always going to have that, like going back to what I was saying, it's always going to have that ripple effect where it's going to affect everybody in the state.
And not just the premiums that, as a real estate broker who's selling real estate, I talk to clients about the value appreciation of their property or the lack of. So I was looking at this, and we did studies of this, and we work in conjunction with FIU and we with other economists and experts within the industry. And one of the studies found that homes that are in the flood zone area appreciate much less than those out of the flood zone area, or let's say the zoning, that there's high risk zoning areas. Those houses, if I bought, like, let's use Coconut Grove for example, if I'm at the bottom end of, let's say, Prospect or where Sunrise Harbor is, or Battersea, for example, if I'm down on the flood zone area, flood zone X of Battersea, as opposed to being up the hill, which is the top where you've got main highway area and you cross over, the values of those homes actually valued quite differently, because the insurance premiums, and I think we discussed this, once they exceed that of the property taxes, then you've got a real systemic shift of behavior. And we've actually seen that. We've seen the insurance get higher than what people's property taxes.
Right. Yep.
That was, I think, that was like the tipping point. So as we move forward, one of the things that we'd discussed in the past was, I mean, we're all talking about insurance now, getting insurance, but what about when they will stop giving you insurance? When they just say, and there's a lot of houses that have become uninsurable. What happens then?
That's a very interesting, an interesting topic or point there, where it probably becomes uninsurable. Then at that point, I think that the value of that property, when it comes uninsurable, how's the seller going to get rid of it? If they can't, if the one's going to come in here and purchase the property can't get insurance.
Well, we call it land value. If the structure has no insurability, you're going to have to rely on someone buying that house for cash. You are going to need a cash buyer. You have to have a cash buyer, but a cash buyer's not going to look at a house and want to improve on it.
And that's becoming more frequent based on what I'm seeing in my firm. Is a lot of the deals becoming cash deals, cash buying deals because of the insurance problem. And even I've seen apartments too in the Coral Gables area where they have the dock in the back, but because of issues with insurance, the HOA, they say, listen, we're only accepting cash deals.
Which becomes a legitimate problem, because then your buying pool shrinks significantly. And that means that, and even if you're buying cash, that cash buyer is going to be cognizant that they're not going to get insurance. The way I view it is that at that point, in order for you to get insurance, the only thing you can do with an uninsurable structure is tear it down to build an insurable structure, which in simple terms is a brand new house.
And I have some clients of mine where, where they're that cash buyer, and what they're doing, they're getting the money that they would pay in an otherwise insurance policy or insurance premium. The house is insurable, but what they do is they get the money and they put it into like an interest-bearing account or a money market account so it could grow over time. And they're, listen, if something happens to the property, I'll go ahead and pull out the cash because I know if I put money into the insurance policy, I'm not going to get anything in return.
And that rolls into the nice conversation of self-insurance, which we see a lot of. When you see these big homes, and again, I know lots of affluent homeowners in homes that are worth 10 million plus, and they're self-insuring because they've got, let's say they've got hurricane doors and windows, they've got a raised house, their house is essentially a bunker, and they figure that if they're going to go and get insurance, and that insurance is going to be $100,000, and their out-of-pocket premium that they might have to pay if there is a storm might be to fix the roof and some other things, a couple of $100,000. So it's kind of not even worth getting insurance. You just insure yourself. And we're seeing more and more of that over time.
I'm seeing the same thing at the closing table where people are just, again, self-insuring, putting money into accounts to get money back in case there's an event, a catastrophic event. So people who have the means to shift from insuring what was back in the day, the thing to do, are now shifting to self-insurance, putting money into accounts, letting it grow over time. So if there is an event or some kind of hurricane or storm, they can just grab that gain and put it towards the loss.
Which I think totally makes sense. So, you're taking the money, you're insuring yourself, and then obviously long term, you're going to be in a better position. Arguably, if you are dealing with a storm, you've then got to kind of figure out the risk that's going to go with that and whether or not that's going to be an issue for you. I do feel moving forward now, I see homes that are older homes and people have dropped some money into to try to fix them up. It seems apparent that it seems dangerous. Some people who have older homes close to in the flood zone area should not be dropping a lot of money to renovate those houses.
I agree.
Because sooner or later it's going to be worth land value, and then you might as well just take it out from there and do
knock it out of the wall.
I had a slightly, I just call it nefarious viewpoint, but I would say something that made me think, which is, wouldn't the city benefit from more older homes being torn down and newer homes being built, in so much as it would be less strain on them and it would actually potentially provide more income to the city by seeing a new house? Because the assessments on insurance, the assessments on the value of the property, when you renovate a home, it's very hard to track. It's very hard to know how much money people put into the property, and the city isn't very good at catching up with knowing how to charge their taxes on those homes. Once you've got a brand new house, it's going to get assessed. It's going to come in, they're going to assess it properly, and you're going to get a much better accuracy in terms of the taxes that should be paid for that property. So I'm going to say there's something going on between the city and the insurance companies, but it kind of feels like it would benefit them if they saw a lot of these older uninsurable homes get torn down and new houses to go on those lots, providing more income to the city.
To respond to your direct point there, I think it all depends on who's the mayor at the time. It all goes back to politics. It depends if it's red or blue. I think it depends on the political leadership at the time as to what they would shift in doing, as for example, older homes being forced to get knocked down, to build newer homes, bring more income pursuant to the property taxes. So there's a lot of political analysis that plays out here. But you're correct. If they get knocked down, right, and they have a new structure, new roof, new everything, So, but I don't think that would still change the rising cost of insurance premiums. Because you go have a brand new house, they're still going to see it as a liability because of where that house sits.
So new houses, getting into buyers now, because we talked about how the sellers have to view things. Moving into the buyer's psychology as buyers coming in and saying, look, I'm going to assess what kind of house I'm going to buy or what condo I'm going to buy.
Put it this way, they will start saying on the newer structures that instead of saying wear and tear, what they would use as a defense on the older structures, they will say that the new structure, to avoid paying the loss or the claim, has a construction defect to it.
Oh, really? How can they?
I've seen that as well.
Oh, there's a construction
lack
defect.
of workmanship. Yeah, I'm telling you, they try to find any loophole or any kind of defense to either prolong and underpay, or deny, or just underpay. So they're always trying to fight. It's a business. You could do. I think you could knock down every house in Miami, put new structures. They're still going to want to. The rates are still going to go up.
So there are areas where if you're very risk adverse, I think there's a lot of people on the water who accept the risk of high insurance premiums. You go to North Bay Road. Here's just an interesting statistic. This is just facts and numbers that I had picked up on. There are houses on North Bay Road. North Bay Road is a very prime street on Miami Beach, on the water, and there are houses on there. A lot of houses on that street that are $30-40 million or more. And right now there's a lot of homeowners that are paying $250,000 a year on their insurance, on their flood insurance. And that seems like just a huge number. But at that level, they're like, you know what? I got a $40 million house, but I'm worth, I don't know, 300 million, $1 billion, whatever they're worth. They're like, oh, I'll just pay it. Yeah. So I think that there's a group of buyers out there who are less sensitive and they just accept the reality and they'll pay it because they have the money to. For those who are more working wealthy and sensitive, I see a lot more, and I've already seen this, a lot more movement to buyers buying in less prone flooded areas. So areas where they're not directly on the water, they're not lower level. There's certain spots in Miami, like the Bluff, for example, in Coconut Grove, which is a ridge that runs down from Tiger Tail down to Bayshore. And again, just nuances and knowing these streets, that is 20, like I've got a house on the market right now on Owewa. It's 23 feet above sea level. That house is never going to flood. Yeah. And that is an example of something. There's a lot of value in that. I think that maybe buyers haven't fully appreciated the value benefit. I think they're starting to now. And if what you're saying is correct, that they're going to keep increasing the premiums, the value appreciation of a protected area that's less prone to flooding or just cannot flood or won't flood is going to exponentially become more and more valuable as years go on. So if you want to protect your investment, go to the higher ground.
Yep.
As buyers go out there, I say to buyers right now, don't look at, the cheap becomes expensive. I think that's always the case. And those areas when you're in the lower flood zone areas and you get a house and you go, oh, it's so pretty. Look, they totally did a remodel and it's gorgeous. It's an old Spanish and it has all this charm and personality. But the chances of you getting proper coverage on that house from an insurance carrier may be slim to none. And that's just the facts of life. Yeah. That's just it. Sorry, it is what it is. I want to finish off going into
just to touch on that. I'm a strong believer, and I've said this a few times, that the next foreclosure crisis that is to occur, or I think it's going to occur, is going to be in part or heavily influenced because of the insurance premiums.
Oh, that's interesting. That's actually a really good point. The next state of basically what is a foreclosure? Foreclosures.
Yeah, when somebody stops paying a mortgage and the property sues them to force the sale of the property to collect their debt.
They can't keep paying for the property. They physically don't have the money to keep paying. What we had on 2008 was that subprime collapse when people couldn't pay because they were over leveraged, because they didn't actually have the money to pay for the costs. Now we live in a world where people have the money, but costs are rising at such a level that they then don't have it because the the scale just tilted. Before it was not enough cash. Now its costs go higher.
That emphasis that I'm putting about foreclosure, that goes across the entire spectrum, for everybody. So what I've seen in my experience at the office or my firm is, you'll have properties worth $10 million, right? And the homeowner could afford the insurance, they could afford the mortgage, the property taxes, but what they do is they allow for the banks to do the foreclosure on the property, to then do a loan modification on the property and lower the monthly. So they'll do it on purpose.
So they'll force a foreclosure in order to bring their costs down.
Yeah.
What about...
Which is what happened in South Beach for some time.
How did that... Give me an example of like...
On the condos. Some of these condos were like the Icon, for example. They were worth I'm not sure what they're worth now. I mean, I know there's a nice price tag to them, but some of these people were buying these condos there in that building, and then when 08 came, they let the properties just go to foreclosure, and they just started doing loan modifications on the units.
There's a whole movement, and you kind of segued nicely into it, which is the whole condo market. Because a lot of the conversation, I know people are probably imagining in their heads, they're saying, well, you're having a conversation about houses, and they're imagining a house, and they imagine like the waves coming up and roofs getting ripped off. But the condo market is actually at an enormous level of risk. Older condos, and what you just mentioned on the foreclosure process gets compounded by increased HOA fees caused by older buildings. And just off the back of what Craig said this morning at his ISG report, Q1, which is a fantastic report, and he really touches on a lot of good points that we're going to get into in the coming weeks, is that these older buildings, which make up a huge percentage of the market right now, the residents of these buildings, a lot of them, I'm a demographist. I'm an economist, but I'm much like Craig, a study of the human behavior, the demographic groups. Yep. The people who own these buildings, who own in these buildings, many of them are retired. They're not drawing income anymore. They're subject to inflationary forces without being able to offset them with income that may have raised in accordance with what's going on with inflation. They have a unit that has just gone through a major assessment because of the way the laws have changed. So number one, they're hit with inflation. It's like a 3-punch and you're out. Number one, they're hit with inflation. Costs go up, things get more expensive. Number two, the building now has to start having major assessments on the building to fix things, to keep it up to code. The pool needs to be fixed, the terraces need to be fixed, all these other needs to be fixed. Then the insurance premiums get jacked up by the insurance companies because the buildings are seen as higher risk.
Yep.
And then they look at it and say, if you're right, screw it. I'm just going to let this go into foreclosure because carrying this unit becomes too much. Or the other, if they're lucky, they're going to allow themselves to be open to takeover by developers who want to come and buy the building out and tear it all down.
And what happens, just to piggyback on that, is remember that when you own a property, for example, a condo or a single family, and that unit or property goes to foreclosure, right? Let's say you owe on your loan or your mortgage. Let's say you owe, $2-3 million on your mortgage, right? But your property, right, is worth $7 million. So you have a $4 million there equity, right? These people would literally allow the property to be sold, right? They'll wipe off the mortgage, right? And then somebody in the foreclosure sale is going to acquire that property for for somewhere near the market value of that property, say $7-8 million. But what happens is that homeowner has the right, okay, once that property is sold, to liquidate that first mortgage or second mortgage or both, or even the HOA fees as well, to go after that, what's called the surplus. So it's some of these guys, it's an entire business behind all this foreclosure stuff.
Yeah, it's not as simple as people can't pay their strategies.
Yeah.
I think that I have a message for those people who own in these older buildings who are in a position where they're hanging on and they're hoping that things are going to get better. And they're thinking, well, I've got this unit and it's big and it's beautiful on the beach. I say to those sellers, you really need to understand the forces at play and really realize that things may not get better for you and probably won't. And you should really think about getting out. And for the buyers out there, like we said earlier, that old saying, the cheap becomes expensive. Yep. We see that a lot. You know, we try to guide people accordingly. And that's the reason why the newer product, and even today, you've got the product from the last 10 years, which there's not that much of it. But the brand new product, the product that's coming out now, the new construction projects, those ones, I believe they are raising the bar again to what they're doing to create more protection from the forces of nature. So a lot of buildings now are built on plinths. There's a building on Miami Beach called Paragon. They built an entire, like a bathtub structure to create insulation from storm. They're putting so much into this, and how they're structuring, and I think how they're going to have to structure moving forward. The evolution of construction is getting exponentially better. And I think that's probably why those are going to be first choice moving forward. Are you noticing the new construction, whether it's a house or a condo? You see them thinking a lot further ahead, being a lot more, or that's just not your area because I know you're dealing with them in court. But are you noticing anything out there in the market? Are you seeing more the cases that you have every day? What's the typical case that ends in tears? Like, give me an example of a situation with a South Florida homeowner where you go, yeah, this group over here, they keep getting screwed.
Is those individuals who are retired. Those are the ones that are always currently speaking, they're the ones that are getting screwed and pretty much torn to shreds by the insurance companies and the market.
Why do you think that group?
Well, like you said, going back to jacking up the HOA fees, the insurance, everything that's ongoing, in the insurance market and just the market itself as the real estate as a whole, it's, they're staying behind. They're not staying up to speed. Most individuals who are retired don't have the funds to go and just replace the entire roof of their house.
Yeah.
So they get hit with these non-renewal notices. Hey, by the way, we're not going to insure you anymore. What do they do?
What can they do?
Yeah, I mean, if it's a case that we have in court and they get hit with a non-renewal notice, there's case law out there that could help them. But at the end of the day, you have judges, for example, that are going to make the last call of whether or not to stay that non-renewal notice pending the resolution of the case.
So, in conclusion of this whole conversation, the insurance situation right now obviously has got more challenging in the last couple of years. The sad truth is it's not going to get any better. The realities is that if you're going to go out and make a purchase, be cognizant about the risk that is carried with that. The system, this is one piece of a big system.
Yep.
And there's lots of different forces at play in the process. And those, if you're a buyer, I know that a lot of people appreciate watching this podcast and tuning in, because this is not an easy conversation to have. It's not a super comfortable conversation that you might find a realtor typically having, because a lot of professionals would just say, well, why would you not want to promote everything in order to sell? I believe that there's good product out there that will stand up against the challenges of the insurance business. And I think there are some that simply won't. And those losers will start to lose more and more, and it'll get worse. And this is, if you call it a warning, it's a warning. If you want to know more, I'm going to put my information, as always, below, Hugo's information below. If you have a question, we always say we love the input from the audience. DM us. If you want to know something, DM us and ask us, because I think this is such an important conversation to have. It's so very real. And I hope it's been helpful. You've enlightened me a lot with what's going on within the market. I mean, it isn't a surprise, but it is sometimes a little bit of a surprise to know how insurance isn't as effective coverage as you might think. And, maybe you guys watching this might want to go and pull out your insurance premium, your coverage package in your closet and
see what's really being covered.
See what's being covered. Find out what they're really going to cover. Find out clauses, because you can't just leave it to chance. Hugo, Thank you. As always, really appreciate this. Thank you for watching. Hope you enjoyed the podcast. As always, stay tuned for another Better Decision podcast as we try to bring you better decisions to make throughout 2024. Thank you. Hugo, thank you again.
Thank you.